Let's start with the top stock for you, Brian. The first one being HealthEquity, that's ticker symbol HQY. For our listeners who may not be aware, Brian, can you just explain exactly what HealthEquity does and how it is aiming to solve the healthcare expenditure problem?
Sure. So HealthEquity is a company that we've covered on the show before, but they are the country's leading provider of health savings accounts. And they actually just completed an acquisition recently of a company called WageWork. So for as long as we've been covering them on the show, they've been the number 2 provider, but they have now leapfrogged into the number 1 position. So they now administer 4.9 million health savings accounts. And they also provide other types of healthcare focused savings accounts, such as flexible spending accounts, health reimbursement arrangements, COBRA benefits, etc. But health savings accounts are their bread and butter, and these accounts are basically a triple tax-free savings vehicle for healthcare expenditures for Americans. So you can make contributions to an HSA before tax. Any funds that are in there grow in the account tax-free. And then as long as you spend them on qualified healthcare expenditures, that is also tax-free. So these are almost a no-brainer choice if you have access to them. However, not every American has access to an HSA account. In order to gain access, you have to have a high deductible health plan. So that is a health plan that has a $1,350 deductible for an individual or $2,700 for a family. But high deductible healthcare plans are becoming increasingly popular with employers and around the U.S. because the average high deductible health plan offers a premium savings of about $1,700 per year. So these things are definitely growing in popularity with both employers and members.
Absolutely. And I think really with this particular model with HSAs, popular especially with younger adults who tend to be on the healthier side. But I think one of the key things with HealthEquity, I think you had a chance to talk with the CEO. I know Motley co-founder and CEO Tom Gardner and I had a chance to sit down with him. One of the big things I think with HealthEquity, I love the ability to save for expenses and then to be able to invest those expenses. But I think the education piece is key to that because obviously most people are getting their insurance through an employer. So it requires an employer being educated about this particular option and then having the employer also educate their employees. And so I think there's a huge opportunity within this space to just increase overall awareness and really too still continue to get people interested in learning about the advantages of an HSA and the advantages of just being able to invest and set aside money for healthcare expenses long term.
Yeah, I think you touched upon a couple of important points right there. So HealthEquity does provide the HSAs, administer the HSAs themselves, which can lead to significant cost savings. But they also do a couple other things that help members save money. So through their investments, they actually have partnered with Vanguard, the leading provider of low-cost index funds, to enable their members to invest in Vanguard funds once they have funds in their account. They also provide a high-touch model. So if you are a HealthEquity member and you have a big healthcare expense coming up, say you need an MRI or a PET scan or something like that, you can actually call HealthEquity and they can actually do some shopping around for you so that you can save money on your spending by them recommending to you a certain facility over another one. So they are helping their members to save money in numerous ways. And for investors, what really excites me about HealthEquity is that the HSAs have come a long way, but there is still an enormous amount of room for growth here. To put some numbers on it, there are currently about 22 million HSA accounts in the U.S. Within the next couple of years, that number is expected to reach at least 50 million. So the number of members is going to grow, but the amount of assets that are held in these HSA accounts is combined about $8 billion today. HealthEquity believes that at market maturity, that figure will grow to $600 billion. And that's really exciting for investors in HealthEquity because they earn fees on both assets under management as well as subscription fees and transaction fees. So the more people that choose HSAs and the more assets they have, the more money that HealthEquity will make.
Absolutely. So a huge long-term runway right there for HealthEquity. A lot to watch with this particular platform, especially with that WageWorks acquisition that you mentioned. They are aiming to be an end-to-end solution for healthcare expenses. So a lot to watch there.